they're not going to stop the problem of currency collapse. They're just going to create a near-term turbulence. And if you're a trader, you may get caught in that turbulence. But ultimately, if you're an investor and you're concerned about preserving your wealth to give to your children or your grandchildren, then whenever you're in an inflationary environment, your strategy is simple. I have to convert my weak currency into a strong currency. Ideally, convert my weak property into strong property. And I think one of the obvious things is digital property, right? If I created a city in cyberspace with 21 million blocks and nobody could make any more, and it was going to last for 1,000 years, and it was the dominant city and everyone wanted to live there, would you want to own one of those blocks? And I think the answer is yeah. And that city is called Bitcoin.
As the crypto markets continue to fall recently, Bitcoin fell to its lowest level in 2022, down more than 50% from its all-time price high. The cryptocurrency crashed below 31,000 on Monday for the first time since July 2021, according to CoinMarketCap's price index, marking the latest in a severe capitulation from its price peak in November. The price drop comes amid a broader crypto market collapse, which has seen nearly $300 billion wiped from the value of cryptocurrencies over the last 4 days. Ethereum mirrored Bitcoin's demise, matching its 13% price fall since last week, while some other leading cryptocurrencies fared even worse. Solana fell by more than 16% over the last week, while Terra Luna dropped by more than 52%. One measure of market sentiment suggests Bitcoin traders and investors are experiencing extreme fear as a result of the tumbling prices. The Crypto Fear and Greed Index, which analyzes exchange data and online trends to assess overall market sentiment, is currently at 11, marking its lowest point since last year. Crypto markets are cyclical, but there are a couple of other factors driving the sell-off at the moment. The Federal Reserve raised interest rates half a percentage point last week, and Wall Street responded with a stock slump. Crypto markets have followed suit, shedding nearly $300 billion over the past week. Michael Saylor, the CEO of MicroStrategy, whose firm holds the most number of Bitcoin at 129,218 Bitcoins on its balance sheet at the end of March. No other publicly traded U.S. operating company holds as much Bitcoin. MicroStrategy stock is down 58% this year against a 30% slide in Bitcoin. Michael Saylor, in a new interview, has reacted to the current market volatility and inflation. He shares his views with the Money GPS YouTube channel.
I think that if you're a short-term macro trader, like you're thinking in terms of hours or days or even weeks, you're really concerned about that question. But I think that if you have a time frame of 4 to 10 years, I think there's a different question, which is why are the interest rates going up, and what is the macroeconomic environment? And I would say you probably shouldn't even buy Bitcoin if your time horizon is less than 4 years, because you're a trader. And if you're a trader, you're probably not going to care about anything that I have to say. You're just looking at whether it's correlated or uncorrelated, and throwing lots of money around without thinking about it. I think if you're really a deep thinker or a macroeconomic investor, the bigger issue is we have monetary inflation. The money supply or the currency supply is expanding. I think the news today in Turkey was 70% inflation in Turkish lira. We probably got something in the range of 15 to 20% currency inflation in the US dollar and the euro. We've got 40% inflation in like an Argentine peso or more. So what you have is an inflationary environment. We know the CPI, which is a manipulated measure of inflation. It's actually the lowest inflation that one could reasonably measure, I think. It's like 7.5%, 6.5%, 7, 8% in the US and Europe. And these are 40-year highs. So the CPI is 8%, but the actual asset inflation rate is double to triple that. So the reason that interest rates are going up is because there's pressure on the central banks to get inflation under control. And their one tool to do it is to raise interest rates. But they're not going to stop the inflation, because the inflation is caused by excessive money printing, budget deficits, and the wars and political policies, domestic and foreign policies, and these policies continue. So given the fact that we have an expansive currency environment, And what you can see is the price of food and energy and scarce resources keeps going up. The question really is, if I have some money, what should I invest in? And the answer is you don't want to hold currency because the currency is collapsing in value. You know, the US dollar's lost 99.7% of its value over 90 years. I mean, and that's the winner. The losers are losing 99.9% of their value over 100 years. So the currencies are all collapsing. So I don't want to hold the currency. I don't want to hold bonds because bonds are currency derivatives. I'm going to basically, you're going to give me $1 million and I'm going to give you interest on the $1 million at 3% for 30 years. And I'll give you the $1 million back. And in 30 years, the dollars will buy 10% of what they buy right now. So that's even worse. You don't want to hold a value stock that it's valued on cash flows, because if a stock is valued on cash flows without growth, it looks just like a bond, right? It might be slightly better than a bond, but if the currency is losing 10% of its value a year and you can't raise your cash flows or raise your prices, you have to increase your cash flows 10% a year to offset a 10% currency collapse, right? So when the currency is collapsing at 70% a year, like Turkey, the company you own has to raise its prices in Turkish lira 70%, or sorry, you have to raise your prices by an amount such that your cash flows would increase by 70% so that you hold parity in value. So equities are currency derivatives, partial currency derivatives. Bonds are almost complete currency derivatives. Commercial real estate is a partial currency derivative. The currency is currency derivative, right? It's a full currency derivative. So what do I own? And the answer is I want to own scarce property, scarce desirable property. What is it that you own that an affluent, intelligent person will want to buy from you in a decade? That's the question you have to ask yourself. So if you're owning things that will last a decade, right? I mean, if you buy a car that's not going to last a decade, it's not really an asset, it's depreciating. But maybe you own a sports team or a Picasso painting. I don't know. Will people want to buy gold from you in a decade? Will they want to own the building that you own in a decade, right? Will they want to own the intellectual property rights? Well, it all depends. Bitcoin is scarce desirable asset because it represents digital property. And that strong property, I want to move out of the country. I want to move it out of the jurisdiction of a politician that may confiscate it or tax it away, right? And that's why, converting $1 million of pesos into $1 million of dollars in Buenos Aires won't help you, because eventually the politicians will freeze your bank accounts, convert it back into pesos, and devalue it 20-1. That won't help, right? Converting $1 million of pesos into $1 million of dollars and then buying $1 million worth of big tech stocks in the US may be a better idea. If the big tech stocks are monopolies, they'll be able to raise their prices, hold their cash flows, and hold value. Monopolies will be fine, right? What is a monopoly? It's scarce, desirable property. If I offered you a monopoly with unfettered ability to change the price of something that, like oxygen, sell oxygen to New York City, you're probably going to do okay. The problem with even monopolies, though, is over time, monopolies get regulated, right? Like in theory, the richest person ought to be the person that sells water in New York City, but they're not the richest person, because the New Yorkers get together and they decide that they don't want the water company to raise the price of water to $100 a gallon, even though you'd pay it if you were thirsty. What can I buy that's going to hold its value over time that represents scarce, desirable property? Not just scarce, because there's a lot of things that are scarce that aren't desirable, right? Scarce, desirable property. I think one of the obvious things is digital property, right? If I created a city in cyberspace with 21 million blocks and nobody could make any more, and it was going to last for 1,000 years, and it was the dominant city and everyone wanted to live there, would you want to own one of those blocks? And I think the answer is yeah. And that city is called Bitcoin.
The crypto market is not the only assets crashing. The Nasdaq also continued to lead the losses as investors moved away from high-flying tech stocks, shedding 3.3% in the morning trading on Monday, according to the Washington Post. April was the worst month for the index since 2008 as jitters sent investors running for cover. The trend carried over into May. Amazon, Apple, Meta, and Lyft all slid 2%. Microsoft declined 3% and Tesla was down 5%. Edward Moya, the senior market analyst at Onda, noted that crypto markets have been highly correlated to indexes such as the Nasdaq. He observed that the tech-focused index is down 21% this year, while Bitcoin is down 22%. Moya added that confidence is low and the asset has been mainly consolidating for most of this year. Bitcoin is really stuck in a sideways news cycle where you're just waiting for it to be calm on Wall Street, and then you'll see more people confident in investing. I still think there's a lot of long-term potential value here, but you have to be able to stomach this volatility. Here at Savvy Finance, we have been buying the dip with every cent we can spare. We encourage our viewers to not get discouraged about the current market situation. Most importantly, never sell your crypto at a loss. It may take some time, but the market will surely bounce back stronger. Hurdle hard and stay savvy. Thanks for watching.